Even in a challenging investment environment with market declines and volatility, if you know where to look, there are opportunities to be found. As we navigated the past year, we saw that stocks and bonds were trading down around the world together. And the typical portfolio, often referred to as 60-40, meaning 60% stocks, 40% bonds, did not serve investors well. And if you looked at and evaluated portfolios that included alternative investments, many of those portfolios outperformed. If you think of the market for investable assets at large, more than 90% of commercial real estate or companies are not publicly traded. Public markets, stocks and bonds, they're really representing less than 10% of the investable universe. And so they're not often representative of what we're seeing happening in companies or properties around the world. There are several advantages that you have as a private investor. Often you are in control of the company or asset, and so you can affect change, whether that means streamlining expenses or adding product or growing geographies or doing acquisitions. The second advantage is that you're not subject to the whims of the public market, where you can see changes in values up and down with much greater volatility than occurs in the private markets. In many ways, Blackstone has been the pioneer, bringing private investments to private wealth individuals. We knew there was demand, but there wasn't an abundance of high quality product, and there was a really large gap in terms of knowledge as to what are private investments, how do they fit into portfolios. And so not only did we design institutional quality products to bring to the market, we matched that with significant education. We're really at an exciting inflection point in private markets, especially for private wealth individuals, with more product available, greater adoptability. And I believe that trend will continue, and I believe it will continue globally.